Hi folks, Scott here, and this is the wrap for Thursday, July 11th. An impressive day for the Bulls today. Managed to put in a new multi-year, maybe even an all-time high. I should know that, but I don't. I know it's at least a new 200-day high close. But what I want to show you the results of fading gaps after at least a 50-day high closed, which this also is, but not a 50-day high. The 50-day high is over here. 50-day high close, not a 50-day high above the 200-day moving average, fading the subsequent opening gap. And there you go. That's using an end of the day stop, not something I recommend, but a good place to start your analysis. And it shows strong numbers for shorting up gaps and holding all day. 19 out of 23, really strong. Buying a down gap is just average, just a typical run-of-the-mill gap. 70% probability of filling, no edge whatsoever. Which is a little bit surprising because often some of these other patterns we'll show in our worksheet tonight for our members will actually favor gap fill for gap down as well. Because we had an unfilled up gap today, that's generally positive for gap fill tomorrow. We've had many consecutive higher highs and higher lows. Many consecutive higher closes, many consecutive up gaps. The momentum is extraordinary right now, but it's run into what could be resistance. So we'll see. So, and this shows you that down gap's just an average setup. An up gap would be a gift, at least based upon this particular study. So we'll see how all the other data shakes out. But there's a really good one to consider going into tomorrow. Right. Let's break down today's gaps, and I'll start with the worksheet. We had large gaps up thanks to Bernanke. Some of us were calling the Bernanke bounce, Bernanke bump, Bernanke boost, and we gapped well above yesterday's highs, Wednesday's highs. And you can see, looking at our gap guys, 61% win rate and a 1.4 profit factor. Whenever you see them this good, you generally know I'm probably going to trade it. The key words being generally and probably, not always. I'm looking for 60% and 1.3 profit factor, but I'm going to get real interested in trading this, and the evidence is going to have to be fairly compelling for me not to trade it. Looking down below, unique day factors, there were none that were for or against today's setups, nor any unique patterns. And in fact, I can't remember the last time we had something in, or nothing in either. That's why I noted no unique patterns nor day faction play for the 11, just so you would know it was not a mistake. There just was nothing remarkable yesterday. We just worked our way up a little bit. So the gap guides were not quite as compelling, and I will show you those super quickly as those averages, at least not for the markets that I'm trading. It depends on what market you're trading. I primarily trade the ES and the gap, and you can see it did not meet my criteria above the highs, nor did the YM. NASDAQ did, and the YM did as well. Looking at the ETFs, for any ETF traders, whoops. Spider didn't quite meet my criteria. Not bad, but not good either. Diamonds did. Q's right at it, and Russell right at it. So Ford clearly met it. Ford did not. So it wasn't quite as strong as it looked. It was skewed by some of these the Russell numbers. So my pre-market comments that I posted right around 9:20 a.m. Eastern Time this morning showed some other positives as well per last night's video, right? 17 of 19 wins. Well, today makes it 17 of 20. Right? Every day's different, and these are small samples. Plus today was such a large gap. Looking at what I traditionally call a large up gap, 40% of the 5-day ATR, on this part of the month historically, has been a very good time. It's just not the normal time you see large gaps up that don't fill. Normally it's either the beginning of the month or more the middle of the month. We're getting near the middle, but not quite. So that was actually indirectly another positive too, but look at this, extremely large up gaps. You can define it different ways. I used greater than 80% of the 5-day ATR. So anything above 1660 today went above a 200, only a 35% win rate, 35%. And if you add the 10-day moving average, it didn't get much better. So that was the real problem today. And that's basically what I said. problem is extremely large up gaps. So no. Oh, and also these gaps, technically the gap guides weren't even played today because the gap was greater than 100% of the 5-day ATR, and our gap guides only show the results of fading gaps less than 100% of the 5-day ATR in size. So that's another huge flag to keep in mind. You have to really discount those numbers, and how much, who knows. So that's why I'm generally not going to touch them if it's a monster gap. Maybe I'll do a partial play, but this was such a concern, no way I was going to touch it today. And I said I would take my cue from the range guides. So that's what I did. Well, let me show you the action after the open. NASDAQ just ran straight up all day. Blue line is a close. That would be gap fill. Didn't come close in any market today. And all right, so we did take a little bit of heat and profit taking there, and then held. And we had some numbers that were mildly attractive for the low breakout in the ES and some of the other indices as well for the 15-minute range guide and the first hour range guide, but they were only mildly attractive. And Tim Mock, our trading coach, popped in the room and showed some numbers today that for trading the ranges after a very large gap up, at least 80% of the 5-day ATR, and they clearly favor the high breakout and the low fade, not the high fade and not the low breakout. So that was enough, combined with our advanced study and the data not being completely compelling, for me to leave those alone, and that was a good decision. You would have had two losers on those two trades. But check out the 15-minute and first hour guides. I'll show you the first hour guides for the high side. A little bit neutral on the ES. High breakout favored in the YM, favored in the NASDAQ, and favored in the Russell. I'm looking for 55 and 1.1 parameters before I would trade those trades. And then, so 3 out of 4 there. And then the ETFs, Spider check, Diamonds check, leans that way, narrowly misses my criteria, the Qs, and then narrowly misses the Russell too. So what's that, 5 of 8 plus the data knowing for the fading these high breakouts tends to be profitable for very large up gaps, plus advanced studies favored it. I set up the high breakout in the ES and the Russell. The Russell did not trigger. The ES did. And at the end of the day, it had just missed my target by 2 ticks. I turned it, and this isn't something I recommend doing until you've practiced a little bit, and I generally don't do this, but the gap gotcha is an end of day trade that goes in the direction of the unfilled up gap. So I basically rolled my range trade into a gap gotcha trade, added to the position, and ended up making a little bit of money on the gotcha and losing a point on. So went long at 67 and a quarter. Target was 71 and a quarter. Excuse me. Also a point and a quarter, and made about the same on the gotcha. So it all washed out as if I didn't even do the gotcha. So 2 winning trades. And that was all it did, and I avoided a losing gap trade. So it was an excellent day. Market's definitely conforming back to historical norms, which is fantastic. And we had a good day. So that was my day, and that is the wrap for Thursday, July 11th. Have a good one.